What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at the S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of tomorrow's trading day, Monday, February 5th. Well, SPY here on the last trading day on Friday, hitting an all-time high. Of course, the S&P hitting an all-time high. For those of you that don't know, SPY is not technically a stock. It is actually an S&P or an S&P 500 ETF, probably the most popular S&P 500 ETF among a variety of others, but SPY is traditionally accepted as being the most heavily watched and traded, and it is also an incredibly popular vehicle to utilize for trading derivatives such as options on SPY. So starting here on the 1 minute chart, again, we're going to look at a variety of time frames and try to get as much context as possible heading into Monday. Here on the 1 minute chart, you can see that in the first half of the day, we actually got some decent cleaning up on this rejection setup. A little bit sloppy personally for my taste. However, I do expect there were quite a few scalpers taking the short side of this range here, this setup here, which, would have ended up working out. If you guys do want to get scalp setup alerts, perhaps swing trade setup alerts, unusual options activity, maybe even platinum one-on-one, that link to check that out is in the pinned comment. Let's move on here to the 5 minute and take a look at volume on the ETF on this big upside grind move that we saw for the majority of Friday. So you can see here, of course, we had data hit in pre-market, okay, and we got a fade into the open. Now, if we look at actual volume here, we had a big volume increase off the open, which of course is normal. The volume on the big downside move in pre-market, as expected, was lower, of course, than basically all of the active trading hour volume. But the majority of the move today being, or more so Friday, right, being upside, we saw pretty consistent volume. It's actually more consistent than on any average day if you just picked a day out of the hat. Usually you see a big spike in off the open, and then you see kind of a U-shape in volume, right? But you also usually see some pumps, some fades on any given day, and really here on SPY, we only kind of had 2 fades throughout the entire day, and this one's, it's hard to determine because it was heading into the close, which is technically power hour. I mean, it was a Friday, right? But on this dump off midday, we did see a little bit of increased volume, and then the volume kind of returned to the mean, to baseline, as we continued to grind higher. And then heading into power hour, we saw a little bit of a fade, but we did see volume increase a little bit. So the reason we're looking at this to begin with is when I'm looking at a stock, or an ETF for that matter, right? And I have a particular bias. Okay, perhaps I'm long, or I'm positioned short, or I own calls or puts, or I have an option spread on that has a directional bias. You ideally want to see, and this is relevant on any time frame really, high volume in the direction that your bias is. Okay, so if you're long, you want to see upside moves have as much volume as possible, and fades, downside moves, right, have as little of volume as possible. Why? We're looking at a sample size of market opinions here. The bigger the volume, the bigger sample size of opinions we're getting, and the stock is still going up, or in this case, the ETF. Okay. Now, the opposite is true, of course, when you're short. When the stock is pumping, you want it to be doing so on low volume, small sample size. And then with the anticipation of, hey, when the big sample size gets here, and we have more opinions in the mix, that volume will rise and the stock will fall. That's what someone who's positioned short would be looking for. So that's why we're looking at this here, and I think it's interesting, okay? Let's move on here to the 30-minute chart now and take a look. Now, first of all, I really like looking at SPY in addition to individual stocks like we're doing here on the channel. By the way, if you want daily videos, I'm talking 7 days a week, multiple videos a day, going over analysis on all different securities, giving relevant data for the following trading day. Hope to see you subscribe to the channel. This is a brand new channel. It helps out tremendously if you do so. But the reason I love looking at SPY, I'm sure I'll end up doing the Qs as well, because there's so much volume and so many eyeballs that everything is exaggerated. The options chain, the data is exaggerated. We get a much better view of what people are actually anticipating, okay? When we're looking at these self-fulfilling prophecy indicators, like the 200-period moving average, the 50-period moving average, they work because everybody watches them and believes they work. They program algorithms to trade around them. And it's really helpful, even more so, to look at these on something like SPY. So looking here on the 30-minute chart in particular, we're going to look at the 30-minute, the 4-hour, and the daily. And remember, we're always looking at multiple time frames, trying to get as many things to line up in our favor as possible. But we also, of course, if something's not lining up with our particular bias, we have to consider that, not just what makes us feel good, okay? But regardless, here on the 30-minute, we have the 50 period, which is acting somewhat as a support level here on Friday, or was doing so. We claimed that as a support on Thursday. With the 50 period, right, we claimed on Friday as a support level, particularly in the after hours. This is the 200 period. We got that crossover. Okay, so we reclaimed the 200 period heading into the close on Thursday. We got that crossover, which to me, the crossover itself isn't really meaningful. I think the crossovers are overhyped, honestly. But the reason that I care at all is not the crossover itself, it's that the 50 period is now closer to the price than the 200 period, and the 50 period is more reactive. It reacts quicker to price movement, which can help the ETF, in this case, get its feet underneath itself after a move a little better, because that offers a psychological area of what many will see as potential support. Okay, so listen, if you're looking at the 30-minute heading into Monday, tomorrow, if you're a bull, you want to see the 50 period hold, as a support level, of course, if we end up seeing a downside test. And if you're bearish, you want to see a downside break heading back down toward the 200 period. And honestly, ideally, a downside break through the 200 period if possible. Okay, let's move on now here to the 4-hour, get a little bit more context. Here on the 4-hour, you can see that the 50 period is the most immediately relevant one. The 200 period is currently down around 477, 478. So really, here on the 4-hour, guys, all I'm looking at as we head into tomorrow, that 488 level, currently that is about a 1.1%, 1.1% move away. Anything over 1%, I typically say, is a larger move on SPY. Okay, the Nasdaq's a little bit like the Qs, a little bit more volatile, but anything over 1% is a larger move on something like SPY, even though we have seen a little bit more volatility as of late. So just understand that that's a little bit of a move away. But again, if we end up seeing a downside test of that 50 period, I'm looking at that as a potential support level, ideally, if you're a bull. And if you're a bear, you'd obviously want to see a downside break of that. Now, let's look at the arguably the most important by far chart right now here on SPY, and that's going to be the daily. Okay. Now, if we look here, the stock is at all-time highs, or the ETF more so, is at all-time highs. The market, right, is at all-time highs. So when we're looking at this, we're kind of within a channel. Now, you can see here that the 50-day moving average is down at 471. It's not immediately relevant. We're pulling away from that, okay? So here's what I'm looking at. I'm looking at all-time highs, which is 496.05, really 496 region. But honestly, guys, it's not crazy to say 500 is on the menu here in the next couple of trading days, potentially. I mean, it's about 1.25% away, if that, okay? And, expect that is the biggest level we've seen on SPY and the S&P really in years. Okay, it's expected to be a pretty major psychological level, and I think we're going to see a lot of bears looking at that as a potential area of resistance. So if you're a bull heading into, not only breaking new all-time highs, even though it's only been a day, okay, but also 500, understand that may be seen as a psychological resistance, but at the same time, when you see big rips up through all-time highs, it's not uncommon to see a lot of bears getting stopped out, right? If they didn't necessarily know how to manage the trade properly. And a lot of times that can help push the market even higher into that territory, which turns into almost its own self-fulfilling prophecy. It's more of a really, really quick short-term short squeeze than anything, but it gives the bulls the motive and the reassurance that's needed to move up stops, okay, to add to their positions. Because we know if you look at history, actually a variety of studies have shown that buying the S&P at all-time highs doesn't actually result in worse returns over the next 5 or 10 years, which is a really interesting stat if you run the more recent numbers. So that's what I'm looking at here from a bullish perspective. If you are a bear looking at SPY, ideally you'd want to fade hard off of that recent all-time high and just head back down, ideally even breaking back down below 490. I think that would be discouraging to a lot of bulls and encouraging to a lot of bears, which if you're a bear, you're obviously interested in the encouragement of other bears. Okay. Implied volatility, if we look here, let's actually zoom out and get a better view. You can see from a macro perspective, IV is actually quite low here. which if you're buying longer dated options is of interest to you. And then if we want to, we can even, zoom in a little bit here and get the more recent look. You can see it's in kind of the mid-range of the more recent time, which is interesting, but perhaps not ideal for those looking to buy options. Obviously, when you're buying options, you want IV in your relevant trade time frame to be as low as possible. Okay, if it's too high, it can open up the possibility of some potential implied volatility crush. Okay, now what I want to do is I want to look at the options chain and see what the options traders are telling us they think is going to come here on Monday. First of all, we do have a couple of news releases that are relevant to the overall market tomorrow. Here, I'll just tell you really quick. 9:45 a.m. Eastern time, we get the U.S. S&P Services PMI final. Take a look at that. And at 10 a.m. Eastern time, we get the U.S. ISM Services PMI. I went over all the expectations for that on Friday's Roensch Capital show on the main Roensch Capital channel. You go take a look. You can either watch the clip or the full show. They are both over there on that channel. Over there on that channel every day, we're diving even more so into a little bit of the macro and the actual catalysts and the expectations for the data over there. Over here, we're even more so about the charts, even though we do look at the charts a little bit on the Roensch Capital show each day as well. Okay, let's just finish out here and take a quick look at the options chain. Take a look at what's going on. 11.5 million total contracts traded here on Friday. That's a big sample size. Anything over 10 million on SPY is a lot of contracts. We got 5.36 million calls on Friday and 6.16 million puts. So that overall ratio actually leaning slightly bearish. All right. Now, the short-term speculation, that's 0 to 20 delta. Those are typically those gambly style, out of the money, almost, usually short-dated options. Okay, that gives us the best idea of what the short-term speculators are thinking as we can possibly get. 1.57 million calls, 3.2 million puts, nearly double the short-term bearish speculation on SPY compared to the short-term bullish speculation. So listen here. This is data. Don't shoot the messenger, right? The options traders believe that we're going to fade off of this move here in the short term. They don't think, seemingly, the majority of them don't think that 500 is going to break here in the short term, okay? But again, that's not an opinion here. That's just what the data is telling us. So I think this is really interesting. But listen, as I say in all of these videos, the majority here, the options traders, they of course can and oftentimes are wrong. Listen, before you head out, let me know what stocks you'd like to see me cover here on the channel in the near future. That feedback helps out tremendously. And by the way, even if it is just some more SPY or QQQ, I appreciate it, and I'll see you in the next one.